Welcome back to the channel, everybody. So we have some XRP news today. We have some Bitcoin news. We have some US and UK sandbox news, which when I hear something like that, I automatically start thinking about Quant because they are the dominant blockchain. They are the dominant technology over there in the UK. All right. And somebody asked me about Quant recently, so that's why I wanted to do that article. So now we have some BRICS nations and JP Morgan news, right? JP Morgan made a powerful statement. People better start listening. And we have some gold news. So let's begin here with a little bit of XRP news. This article is titled Ripple's Brad Garlinghouse foresees XRP, Solana, and Cardano ETFs. They all make sense in my humble opinion. That's how I feel. Like, yeah, that's a good lineup right there. They are the top of the top and they are legit. And they have a lot of institutional backing. So that makes sense to me. He says it's only a matter of time. The CEO of Ripple said on stage at Consensus 2024 in Austin. Let's scroll down here. It says in Austin, Texas, more crypto exchange traded funds are coming following approval of spot Bitcoin ETFs and progress on ones designed to hold Ethereum's Ether, predicts the CEO of Ripple. Quote, I think it's just a matter of time and it's inevitable there's going to be an XRP ETF. There's going to be a Solana ETF. There's going to be a Cardano ETF. I'm glad he said that. That's interesting. And that's great, unquote, he said. Ripple is closely linked to XRP. Like, I'm laughing. Like, did anybody not know that? Recently, Ether ETFs made abrupt and unexpected progress with key filings being approved by the U.S. Securities and Exchange Commission. Final approval is needed before they can begin trading. Kathy Wood, the CEO of ARK Invest, also said during Consensus that these Ether ETFs were approved because crypto is now an election issue. Right. Garlinghouse said that there will be a significant regulatory approval process before these are approved. But in the end, these will be, quote, speed bumps, unquote. Garlinghouse also railed against what he perceives as a lack of regulatory clarity from Washington. Of course he would. Of course he would. He should. If anybody's going to do that, it's going to be him. Quote, Gary Gensler has been called to Congress. And when asked if Ether is a security, he won't answer the question. Yet he insists that the rules are very clear and don't need updating, unquote, he said. All right, so now let's move on to another article here. Hope you're all doing well. Shout out to Matthew. Shout out to Marky Mark. Shout out to AMPOV Podcast. Shout out to Crypto Schizo, Asti, Glitter Skies. Trying to get everybody in. Nick Morales. Big shout out to everybody. I appreciate every single one of you. I appreciate everybody. I just can't remember everybody off the top of my head, okay? But I love you all. So now, let's go here. What is this about? We have another article. It's titled, Here is XRP price if its market cap reaches $3 trillion. All right. Let's find out what they have to say about this. After we scroll past a bunch of ads. They have ads on top of ads. I can't make this up. There's an ad right now blocking an ad. And I let them play, but I'm just like, you might want to organize that a little bit better. Get your money, though. It begins as such. XRP's price could surge to, $54. They didn't put that in the title. Hey, listen, I'm just reading the article. People get upset when they hear these high prices, but hey, what do you want me to do? I don't write the articles. XRP's price could surge to $54 if its market cap records an increase of $3 trillion, as projected by certain market analysts. The crypto market has continued to evolve, with assets recording impressive growth over the years. XRP also saw this growth following its launch in 2012. For instance, during the 2017 bull market, XRP spiked from a low of 0.003 cents in January 2017 to an all-time peak of $3.31 in January 2018. This rally marked an impressive 110,233% increase within a year, demonstrating the remarkable growth rate XRP witnessed. At this all-time high price, XRP's market cap soared above 128 billion. Let me scroll down just a little bit here. I want to get to the new information they're putting out there. Okay, here we go. Next section is titled XRP price at projected $3 trillion market cap. Notable analyst eGrag recently predicted that XRP's market cap is capable of spiking to $3 trillion mark. He presented an ascending channel pattern that the token's market cap has traded within since 2017. According to him, the channel's midpoint rests on the $100 billion mark, with upper trend lines stationed at $287 billion. All right, we'll leave that one there. Let's move on here. So now this next article, I want to see what he has to say. This is from U.Today. This article is titled Ripple CTO provides quote unquote absolute proof he is not Satoshi. That's exactly what Satoshi would try to do, sir. So now it says here, Ripple Chief Technology Officer David Schwartz has published 2 photos from what seems to be the major annual crypto event Consensus 2024. One of them is a selfie with the formerly popular crypto blogger known as BitBoy. Quote, absolute proof I'm not Satoshi, unquote. Oh, he's just joking around. Ripple CTO says the caption to the other one says that this is, quote, absolute proof, unquote, that he is not Satoshi and he did not create the world's primary cryptocurrency, Bitcoin, as many within the crypto community still assume. In this photo, Ripple CTO is standing next to a guy wearing a glimmering mask who looks like someone who prefers to stay anonymous, like Satoshi Nakamoto. You would not be. He's just playing around. Just playing around. This could be anybody. Of course, this type of person, Satoshi, would not be, in my humble opinion, would never make an appearance again. Would never say who they are again. You know what people will do to, listen, yeah, I'm just going to leave it at that. It says on May 29th, Schwartz took to his X account to make an announcement that during this blockchain conference, he and the co-founder of Easy A app, Phil Kwok, will unveil Ripple's vision and roadmap for institutional DeFi on XRP Ledger. Besides, according to an earlier tweet by Ripple Labs, Schwartz planned to give a public talk about multi-chain interoperability, EVM programmability, RWA tokenization, and many other important matters. Anything else here? Let's see. Recently, the Ripple CTO made a statement important to the XRP community. He confessed that he has never dumped any XRP to buy other cryptocurrencies. However, he did dispose of Bitcoin to buy more XRP and ETH. That's super bullish. Obviously, there's a reason for that. He knows a lot of things, I think, that's keeping him super bullish. And obviously, it's his project, but I think over the years, they've done a lot of good work at Ripple and other companies that are utilizing XRP and XRP as well, like SBI, and, Uphold is going heavy with, promoting institutional use as well now. You got a whole bunch of banks apparently on the side. So, yeah, I would say he has a lot of reason to be super bullish on XRP. So now, here we're going to get to a little bit of Bitcoin news. It says Bitcoin breaks to the low end of trading range, but June data could be next catalyst. It says the price of Bitcoin has traded in an exceptionally tight trading range surrounding $68,000 in the days following the U.S. Memorial Day holiday, but declined to near the week's low in Friday morning trading hours. At 11:45 a.m. ET, Bitcoin was changing hands at $67,300, lower by 1% over the past 24 hours and down by more than 2% from 2 hours earlier, when it briefly rose above $69,000. The broader CoinDesk 20 was down 1.1% over the last day. May, though, has been strong for Bitcoin, which is now higher by 11% since the beginning of the month at around $60,000 level. That's underperformed the CoinDesk 20's roughly 20% advance, fueled by a 31% gain in the price of Ether, thanks to the surprising regulatory turnaround in the prospects for a spot ETF for that asset. All right, let's move on here. We have some more Bitcoin news. Now, this one here is titled, this article is titled, Bitcoin on the cusp of entering parabolic phase of the cycle, says crypto analyst. Here's the timeline. Let's find out what they have to say about this. Says a widely followed crypto analyst says that Bitcoin is on the cusp of entering the parabolic phase. In a new strategy session, pseudonymous crypto trader Rect Capital tells his followers on X that it appears as if the crypto king is one weekly close away from going parabolic. However, the analyst notes that most likely it won't be weeks until the top crypto asset by market cap makes large moves to the upside. Bitcoin, quote, Bitcoin rejects from the range high of its current reaccumulation range. It's clear that BTC is only one weekly close above the range high away from entering the parabolic phase of the cycle, but history suggests that this historic breakout is still several weeks away, unquote. I mean, listen, I typically like to read about what's happening historically with the charts and such, but realistically speaking, everything is so unpredictable because it's controlled. Then I ask myself, who's it controlled by? Well, it's controlled by institutions now. Institutions that were not in control way back when the charts and the history was established. It's all up to the institutions. When they choose to bring it down, they bring it down. Yes or no? And when they choose to pump it up, they'll pump it up, right? So everything is completely unpredictable right now. I mean, I would just watch the verbiage coming out of certain big money entities. That's what I will watch very closely. And I think those can be, they're no guarantee, of course, but those can be huge indicators of where everything is going, you know. And there's still a lot of institutions that are wanting to get into Bitcoin. Who knows when that happens? I mean, do they go by the chart activity? I mean, do they fit into that chart paradigm? I ask that question, you know, respectfully. This is just how I think. There's so many new variables that have to be taken into account. But I think those are some of the major ones. So now let's move on here. Like with Bitcoin, I just see it as a thing of patience. It's just a matter of when. I feel, and it's just my humble opinion, and you can feel how you want, not financial advice. I feel like at some point, it's going to skyrocket. It's going to catch people off guard. There's no telling when, but I think it's close to a certainty. It's going to skyrocket. I'll leave that at that. So now, I feel that this information is going to be closely related to Quant because of all they have going on. They're so integral into all of the different new systems that they're working on in the UK. This article is titled SEC's Hester Peirce recommends US-UK cooperation on digital securities sandbox. Now, if you're the UK and the Bank of England and a whole bunch of other banks and a lot of systems are heavily relying on quant-based systems, quant network, I mean, who do you get to put together this sandbox? It says U.S. Securities Exchange Commissioner Hester Peirce is pushing for a collaborative digital security sandbox between the U.S. and the Bank of England. This initiative would allow businesses to test innovative financial tools in a controlled environment. The sandbox would provide firms with access to technologies, including distributed ledger technology, for the experiments. Peirce, known for her vocal advocacy of crypto innovation, said in a statement Wednesday that initiative aims to test if DLT can improve efficiency in issuing, trading, settling securities, while safeguarding investors, markets, and financial stability. Quote, experience in the UK and elsewhere has shown that sandboxes can help innovators, quote, try out, unquote, their innovations under real world conditions, unquote. She said, quote, a sandbox can provide a viable path for smaller, disruptive firms to enter highly regulated markets to compete with larger incumbent firms. Let's scroll down here. Under Peirce's plan, companies could test their ideas in the sandbox with consistent regulations across both the US and the UK. This would eliminate the hurdle of navigating different rules in each jurisdiction. Firms participating in the sandbox would have the flexibility to choose a set of regulations to operate under. The sandbox environment also provides a valuable opportunity to identify and fix any design or implementation weaknesses before a wider rollout. And that's another thing. So then the sandbox obviously will lead to some serious projects later. So, we'll keep our eye on this. Once again, the UK is deep with Quant. I think that that's who they would rely on heavily for something like this, but I could be wrong. Maybe the US takes the lead. I don't know if this will be a 50-50 project. I'm not sure how that will work out. But I also keep in mind Quant's work with the Bank for International Settlements. When the Bank for International Settlements has had certain projects they're working on, and they wanted to pull a bunch of central banks together for testing, they went to Quant. So if they're going to do it, I would think that maybe the UK would suggest Quant, and maybe the US might listen and say, oh, okay, here, let's let this company do it. They're very professional. They're very good. They're well tested. They haven't had any problems. And if they're trusted by the Bank for International Settlements, if they're trusted by Nexi, SIA Partners, they're trusted by LAC Chain, maybe we should give them a go. Quant, and once again, let me say, not financial advice. Quant, for me, is a super long hold. Like, I'm super bullish on Quant. I don't care what anyone says, who sells and who doesn't believe in it anymore. That's on them. I stand where I stand because I've made that choice. I've done my own research. It's as simple as that. So with Quant, I 100% believe in that project. We'll see how it goes. Maybe I'm wrong. I don't think I am. But for me, yeah, that's a super long hold for me. Goes on the cold wallet, goes away. I don't even check on it. Boom. And leave it there for a while. See what happens when everything pops off. So now, this is how I look at it, or how I'm dealing with it. So now, we have this article here. Let's see if it actually gives us. I'm waiting for it to load up. This is about commercial real estate here. So we're just going to read just this tiny little tidbit here. It's from the Wall Street Journal. It's titled Commercial Property Meltdown Clobbers Pension Funds. Government retirement funds are selling property at a loss as the slump spreads. I'm telling you, it's getting serious. Government pension plans are getting hit by commercial real estate meltdown, and many fear the bleeding is far from over. Canada's national pension plan said in May that it is selling stakes in Manhattan and San Francisco office towers for $225 million less than it paid for them. In April, California's government worker pension fund said it had unloaded a Sacramento property. There's a lot of things going on here. People better check on their stuff. They better start having some fail safes, some protective things that some buffers that they're making for themselves that don't rely on anyone else for the future. Just my humble thoughts. That's all, right? So now we're going to move on here. We have 3 more articles. Now, here is some banking news. And, look, I oftentimes disagree with JP Morgan, but they've been coming out this year and they've been telling some truth from time to time. They come out and they tell the harsh truth. This article here is titled, Liquidity is Starting to Dry Up. It says, liquidity is starting to dry up as the Fed conducts quantitative tightening and bank lending slows, says JP Morgan. They've been saying a lot of powerful things lately. So maybe Jamie Dimon feels like, hey, since I'm about to be out the door, let's go ahead and give the people some truth real quick, because it really doesn't matter anymore. People are like that when they're about to leave a job, a career. It says liquidity and why do they keep repeating that? We read that at the top. Liquidity is about to dry up. It says which could it make it difficult for stocks? Has to be a typo. Has to be. There's no way that they meant to write it like that. According to analysts led by Nicholas Panagursklo, liquidity has entered what's called, quote, a mildly contracting phase, unquote. Since the end of March 2024, they estimate U.S. money supply has contracted by around $200 billion. It's a function of 3 factors. The Federal Reserve's continued, if reduced, quantitative tightening, a bottoming out of usage of the Fed's reverse repo facility, and more subdued growth in U.S. bank lending. Quote, in all, U.S. liquidity or money supply appears to have entered a mildly contracting phase from Q2 2024 onwards, similar to 2022. This follows a rapidly expanding phase from the end of April 2023 to the end of March 2024. It says, in our opinion, this negative delta in the trajectory for U.S. money supply poses a challenge for risk assets going forward, unquote, they say. The S&P 500 SPX has gained 10% this year, and the tech-heavy NASDAQ composite comp has increased 13%. The analysts also pointed out contrasting behaviors between corporates and speculative investors in the U.S. dollar. A large short dollar position by corporates is starting to unwind, while speculative investors are unwinding a significant long dollar position. The U.S. dollar index, DXY, has gained 3% this year. That's from Steve Goldstein. All right, so now let's move on here. Let's find out what's going on with the BRICS nation, or at least this comment from JP Morgan on dollar activities. Now, this article is titled JP Morgan Forecasts Unavoidable Crisis for U.S. Dollar. I've been saying this for so long that there's a problem with the dollar. Now, I don't attribute it to BRICS nation. Most of the things that are injurious to the dollar have been done by the United States itself. However, if all of these other countries are going to stop using the dollar and then the dollar has to come back home, that's highly injurious. That's not good. All right. And I say that because so many people went against me. People always do that in the comment section. They go hard against you. They say, oh, no, Mick, there's never going to be a problem with the dollar. The dollar can never go down. This is what they say to me, folks. And they don't say it in a nice way either. But anyway, now you have JP Morgan saying that. Are you going to go against JP Morgan? You're going to go talk to them? Probably not, right? So anyway, it begins as such. Over the last year, a global shift has taken place within global economics that could set to take its toll, with BRICS de-dollarization reaching new heights. JP Morgan has forecast an unavoidable crisis that could heavily impact the U.S. dollar's prevalence on an international level. And remember, I also have been saying that these companies no longer have the global reach they used to because the rest of the world doesn't want to do business with them. They won't have to do it in the future. They don't want to do it in the future, and they don't want to use the dollar, and they don't want to use anyone who's heavily, favoring Western powers over others. They don't. So these companies will need something to link everything together, and that's where the new financial system comes in. Simple as that. JP Morgan CEO Jamie Dimon has consistently shared his warnings regarding the U.S. economy. Now he has continued that, taking aim at the, quote, extraordinary government spending that could do irreparable harm to the country it already has. Moreover, he notes that the fruit of that damage could be unavoidable. Yeah, it's already being felt right now. It says, throughout the last several years, two opposing realities have been unfolding. The first has seen the BRICS Economic Alliance embrace and successfully implement a more fervent growth strategy. Meanwhile, the United States has been caught up in an economic reality that appears to be deteriorating. I can agree with that. Sure. Yeah. That is only compounded by the continued de-dollarization practices that the bloc has embraced. Now, those two things may be on a collision course amid BRICS efforts and geopolitical concerns. JP Morgan has forecast an unavoidable crisis for the U.S. dollar. All right, so I'm sure we're going to hear much more. Jamie Dimon's been doing a lot of interviews lately. So now let's move on here to gold. We're going to close out with a little bit of gold news. Oh, yeah. So this article is titled Gold ETP Outflows May Have Stopped, Hinting at Further Upside in H2 2024. Wisdom Tree's Nitesh Shah. It says, with athletes around the world preparing for this summer's Olympic Games in Paris, one analyst likened the yellow metal's recent rally to a sprint against the best runners in the world, with the lustrous metal, quote, heading for gold, unquote. I guess that's clever. According to Nitesh Shah, head of commodities and macroeconomic research at Wisdom Tree Europe, quote, exchange traded product investors who sat on the sidelines for some time are now starting to cheer the metal on in some corners of the world, unquote. And the primary hope is that that quote, the metal doesn't run out of energy too soon, unquote, was being propped up by massive central bank buying, and that has continued. Unsurprisingly, I know why they're stacking up on gold, but that's what's propping everything up. So right now, people need to thank the central banks. Real talk. It says here, quote, gold hit a fresh high once again on May 17, 2024 at $2,402 an ounce. Shah said, since its previous high on April the 12th at $2,401 an ounce, gold eased for most of the month on expectations of, quote, higher for longer, unquote, interest rate expectations in the U.S. The March U.S. Consumer Price Index inflation, which was printed in April, was a catalyst for gold's strength despite the elevated bond yields and strong dollar headwinds. While the March CPI provided a boost to gold, April's CPI print didn't have the same effect, he noted, as, quote, it missed market expectations, unquote, quote. However, a growing sense that it affords the U.S. Federal Reserve to cut rates earlier has helped the metal to move to a fresh high, unquote. All right, listen, I'm super bullish on gold long into the future, especially with all these geopolitical tensions, and especially with expert after expert coming out in recent months, supporting what I was saying last year, that a lot of banks are going to go down. It's just a matter of time. When they do, that gold is going to go up. Just my humble opinion, not financial advice. Gold is going to skyrocket. So then there's that. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. Don't forget, this weekend I will be doing a live stream in the members only section. All right. I expect to have a good time over there, and I expect to do my best. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, everybody, let's get to the money.